If a person has taken a loan from a bank and he dies, what will the bank do in such a case? There are many such cases in Pakistan where a person dies after taking some kind of loan from the bank. In such a case where a person dies after taking a loan from the bank, the first thing the bank looks at is whether the borrower has taken any kind of insurance policy on this loan. If the person taking the loan has taken an insurance policy on the loan, then after the death of that person, his loan amount is paid by the insurance company. This means that now the bank can recover the loan from the insurance company. The second option available with the bank is, if no insurance policy is taken on the loan, then the bank checks whether there is any guarantor or co-applicant on that loan. If there is a guarantor or co-applicant, the bank can recover the loan from them after the death of the loan taker. The third option with the bank is, if there is neither any insurance policy nor any guarantor on the loan, then the security kept with the bank against the loan is looked at. For example, in case of a home loan, your house papers are mortgaged with the bank. Similarly, in case of a business loan, the stock of your business is mortgaged with the bank. This is the last resort for the bank to recover the loan by selling your property. When the bank has no option to recover the loan, it can also recover it by selling your mortgaged property. However, in case of a personal loan or any other loan on which the bank has not mortgaged any property, and neither there is any guarantor or co-applicant, then in this case the loan cannot be recovered in case of death of the person from whom the bank has taken the loan. In this case, the loan given by the bank may become a bad loan.